Hello, everybody. I'm your host, Eric Bird, here at StopStrugglingNow.com. And I want to welcome you here once again. And today we're talking about loans. 0% loan. That's right. Any loan is a risk. And we're going to talk about risk tolerance today. We're going to talk about why interest rate increase by the federal government increases your prime rate, and then why a 0% interest loan that you don't have to pay back, no credit check, no qualifying. I shouldn't say not pay back. It does not have a payment plan, so you don't have to worry about when you pay it back, but eventually you have to pay it back. And welcome. Stop Struggling Now gear. Check. Tifosi Optics. Check. And please like, subscribe, and click the bell below so you get the latest updates. Now, let's get to it. All right, welcome back, ladies and gentlemen, and I want to thank you once again for being here in the Stop Struggling Now Nation on the YouTube channel. And please share the videos. This is how you can help other people, and you never know who you can help. And as I always point out, the join button over here on the right hand side, that's how you can become a member of the channel and show some other type of support. And under the community tab, you receive special messages specifically for you as a member. You receive special videos once or twice a month, and on the Wednesday night live, you're the only ones with the icons that can be in the chat room. And members of the channel can join me on any live stream, because that's where the link is going to be, under the community tab. And of course, I've already mentioned it, the red button over here. Please subscribe to the channel to let the YouTube gods know that we have people interested in what I'm talking about. Now, without further ado, the interest rate, right? Now we're talking about credit, because in 2022, you're going to have to start thinking about reducing your debt immediately. What I'm saying is, when the Federal Reserve decides to increase the interest rates, when you have credit, particularly revolving credit like credit cards, then that is tied to the prime rate. We are going to go to Investopedia, one of my favorite places, so I can get you guys to understand the game plan, so you'll understand why you need to decrease your debt. Because everything you have right now, you have about 3 to 6 months. They are going to increase the interest rates next year, but we're going to go into this real quick, because the link down below for this Investopedia page is going to be down below in the description below the video. And I'm going to go over this real briefly. This will not take a long time. Now, the Fed reduces the interest rate in essence to try to spur investments, but that is just a roundabout way of spurring being able to borrow more money for the same rate. That is why you would reduce interest rates. Now, I'm going to go fast forward on this page, because this is what you need to pay attention to. Some of you have read your credit card information that comes with it, and they'll tell you some things such as your interest rate is tied to the prime rate, and then they add on an additional rate for themselves. That's why sometimes you can get 17%, 20%, 25%, 27%. It gets outrageous. All right. So that is what a prime rate is, basically, when it's referred to by Fed as the bank prime loan rate. Just what you see here. So that is when banks are borrowing from the Fed, or banks are borrowing from the banks. They have a prime rate, so it's cheap for them. And now we go to the credit card rates, because prime rate, banks will determine how creditworthy other individuals are based on their risk profile, which is your credit score. That is basically what your risk profile looks like conventionally. So the lower your credit score, the higher the risk. So therefore, they have to charge you a higher interest rate normally. It all goes hand in hand. A higher interest rate, or higher credit score, a lower interest rate because you're not deemed a high risk for default. So look at this little chart. This is what I wanted to show you ultimately. Look at the chart. The dark is prime loan rate. Fed funds rate is the light blue at the bottom. The prime bank rate is the dark blue at the top. So the Fed rate in the blue, look at what happens right here. 1.56 means 4.34 for the bank prime loan rate. That means the bank could charge you 4.34. Meanwhile, they're getting money loans at 1.56. Then a credit card, they could tack on and say, okay, we're going to give you a 9% interest rate. This is how it works, ladies and gentlemen, but they're printing out of thin air. That's a whole nother topic. But that was just like 2004. So I just wanted to give you an idea. You can see this chart of what the actual Fed rate is, like 0.56 is what they're borrowing and loaning each other money against. But yet at the consumer level, you're going to be at 3.25% and higher. That is why the impact of an increase in interest rates causes the price of homes to go down, because now if the interest rate goes up, you cannot buy the same amount of home for that price. Now you can only afford a lesser amount in dollar cost, which means a smaller house. That's how this works. So this is why they have delayed doing the interest rates. Now, what I'm trying to say is you still are probably going to need credit of some sort. We've talked about credit for 2-3 years. I stopped talking about it too much in 2021 because the fact of the matter is way too much credit at this point is going to come back to haunt you when they increase the interest rates. You have 3 to 6 months to buy your debt down, pay it down, okay, before it kicks in, because it's going to increase. Now, the parts I want to talk about is there are solutions. Well, solutions you may not like because a lot of people don't like investing. There's ways you can get around it thanks to the new fintechs, thanks to some new innovations in crypto. So today I'm going to go to some crypto, and please stay tuned. I have something special. If you watch this video before December 31st, you will have an opportunity to get into a New Year's Eve vacation rental at ridiculous rate. All right, 2-bedroom, 2 baths, less than 140 a night, and New Year's Eve. So check it out. And once you go past this, you're going to have to go to SSN Lifestyle for other hot deals that you'll be able to find. Now, you can see on the screen, Nexo. Borrow against your crypto at 0% APR. So some of you are thinking, just like normal traditional financing, you're saying, wait a minute, even at 0%, I'm going to have to pay 1% of what I owe every month at least, right? Or something. Even at 0% for 18 months, or 0% for 24 months, or 0% for 12. So this is not your grandpa's financial institutions, ladies and gentlemen. This is crypto. This is Nexo.io. There's a link down below. If you have bought crypto and you're just letting it sit in your MetaMask or Trust Wallet or somewhere else, and it's not earning interest every day, then you're missing out, because you could have your money sitting at Nexo earning interest every day, or Celsius Network as well, earning interest every day. But let's get to this 0% interest. It's even more valuable than you will be able to find out until the next few minutes, because you guys this is unbelievable to me. Borrow against your crypto at 0% APR. Notice they don't have 24 months. Notice they don't have 12 months. This is incredible. No credit check, no qualifying, no monthly repayments. How about all of that I just said? No origination fee, no charge. So if you have $1,000 in your account and you say, I want to borrow $300 out of it. You get $300 in your account in less than 15 minutes with no credit check, no qualifying, no nothing, and you don't have a monthly payment plan either. How about that? At 0% interest, and there's inflation going on. That gives you something very powerful that only the richest of Americans are able to normally take advantage of. Now you are at the top of the heap, but you do have to invest in crypto. That is the thing. There's 40 different cryptocurrencies that you can actually borrow against. But here, why borrow with Nexo? Look at this. Now, there's a certain number. I don't know what the number is. Normally it's like 20% or less than 20%. Then you have a 0% interest. So the more money that you have invested, the more you can borrow at no credit check, no qualifying, no nothing, and it's in your account in 15 minutes or less. But here is the kicker. Look at this one here that I'm lighting up. No installments. Right. Pay off your balance partially or fully when you want with no fixed payment schedule. So in essence, you have a loan that is indefinite. Now, there is one little catch because there is risk. I'll use the example again. If I have $1,000, I borrow 200, let's say, that's 20%. I have 0% interest. Now, we have to stay at 20% or lower, right? What happens if the coin price that you borrowed, what happens if that coin price drops even 10%? So now your holdings is valued at $900. So in order to maintain 20%, you're going to have to actually add like $20, for instance. All right? But here's the beauty. Remember, some of your crypto is actually earning interest every day. Remember that. So even if it did go down, maybe some of that interest over that 3 months or 1 month or whatever, the interest kicked in and added $1 or $2 or $3 or $4. So you still stay above your threshold. But the main thing here is no payment plan, no return of payment at all. You can just say, you know what, I'm not going to pay it back for a year. Or I won't even make one payment back for a year. That is very powerful. It's the people's money. This is something you need to look into and something that is very valuable. And here it is here. Even though I used 20%, I had a feeling it was going to either be 20 or 25%. But here it is. Get premium rates of 0 to 1.9. Gold or platinum client and keeping your loan to value below 20%. See, I had a feeling it would be in that range because normally that's where you have to stay. It's a flexible option so you can switch between premium rates and our standard offering. This is very, very powerful to help you create wealth in the future, as long as the governments don't mess with these guys, which we'll find out later. Now, let's go with a new company, a Fintech that you guys have heard me talk about before. If you want to try and get credit with no credit check, no qualifying, please do your email, sign up, get a pre-approved with Black Steel. They're supposed to come out in Q1 of 2022. Also, SSN Lifestyle members, you will have an investment opportunity with them. So I let the cat out the bag. Tomo credit card. Yes, you can get a line of credit. They're only reporting to like one credit bureau, but that's fine. We don't really care about reporting to credit bureaus. It's more about if you're able to get a line of credit or a credit card. Who cares if it reports to the credit bureau? Because you got the credit. Similar with Nexo, you have the credit. Why do you care if it reports to a credit bureau or not? In fact, that's the best case scenario because it won't be counted against you. You know how when you go out here and get one credit card, you get a house, you get a car, and the next thing you know, you try to go apply for something else and they go, hey, your debt to income ratio is out of whack. we can't allow you to borrow or get any lines of credit. So here you have a situation where you have to put in your big boy pants and say, hey, I'm responsible enough. If I want to go up to 50% debt to income, I have a reason. So therefore, you can do other credit facilities, other credit cards. So Tomo, and then and again, no credit check, no qualifying. And then I'll go with Avant, which does credit cards and loans. Avant's a little different. You come to Avant.com, and again, the links are down below, and I'll have other credit card opportunities down below as well with no credit check, no qualifying. But Avant does a soft inquiry first, and if you qualify, then, or if you accept the offer, then by accepting, they do a hard inquiry. So we've been trying to eliminate hard inquiries for over a year. Because remember, you have in 2 years, they start falling off. So that's why this whole year in 2021, past year, I didn't really talk about any credit that required you to do a hard inquiry pretty much. Because 1 year, so now you should have 4 hard inquiry bullets and it won't count against you. All right? There's a method to the madness. So with all that said, ladies and gentlemen, thank you for watching. Thank you for listening. And please like, subscribe, and click the bell below so you get the latest updates. And I know it's hard out here, but there is opportunities everywhere if you want to take a risk, because investing in crypto or investing in anything is a risk. So here you have an opportunity, 0%, and that's what everybody's dream is. I don't have to pay it back until I'm good and ready, or until I'm flush with enough money to pay it back. However you want to do it, it's up to you, but you got to be responsible. And otherwise, it's collateralized. They could liquidate you if you fall below the 20% loan to value. They'll send you an email, but if you don't respond in a timely fashion, and you all of a sudden that $1,000 goes down to $600, that 20% loan to value, you're going to need $300 in your account, or 120 additional real fast. So I'm just saying, that's what you have to, that's one of the risks in this. But again, if you pick a coin that pretty much is stable and you use that to borrow against, then you have nothing to worry about. It's all a risk tolerance situation. All right. And with all that said, keep your head up, keep moving, and I'm out.